Welcome back, traders. It's the last trading week of February, and at this video I'm going to present my analysis on euro dollar, Aussie dollar, and Bitcoin against the US dollar. While the calendar is relatively light through the end of this week, markets remain quite sensitive to headlines regarding US import tariffs, monetary policy, geopolitics, and of course artificial intelligence. And as things remain quiet so far, since we don't have any important headlines so far, the technical signals may attract special attention. So let's dive into the charts and see what the technical signals suggest. Then starting first with euro dollar, well, the market has been quite stable despite all this uncertainty around President Trump's new import tariffs. But it seems that upside risks haven't actually faded out as the 50-day moving average managed to support the market so far. Well, it has been a key support level so far this week near 1.1773. But the key problem here is that the price is facing some difficulty in surpassing the 20-day moving average at 1.1830, where the 50% Fibonacci retracement level of this spike over here is located. So that suggests that caution remains, and the technical signals over here are reflecting some uncertainty among traders. Perhaps traders would like to see clear close above this territory in order to target the next resistance at 1.1890 and 1.90, while harder that February's high 1.1927 could come next into view, a break of which could then take us straight up into the next barrier seen between 1.1970 and 1.20. Now, if downside pressures return and the price fails to hold above 1.1773, I believe that there is another key pivotal region near 1.1735. That's where this former resistance trend line from September is located, and that line managed to act as key support a couple of sessions ago. So I would keep a close eye on this region, and if the price manages to close below this territory, then the focus will straight turn to the 1.6060 or 1.1680 region, where the 200-day moving average is located, and that line could be quite important to watch after significantly pushing the price higher in January. If it fails to hold, then perhaps we may see another straight decline towards the 1.1570 region, where a more important battle could take place, as this region coincides with the lower band of this bullish formation over here. And now looking at Aussie dollar, well, the pair has been in focus this week as higher than expected inflation readings increase the odds for a rate hike in Australia. That helped the price to climb as high as 0.7135, almost reaching the 3-year high of 0.7145 registered 2 weeks ago. The question here is whether this rebound over here is a sign that perhaps the price may resume its upward trajectory. The technical indicators down here are not really optimistic. We can see some weakness in the technical indicators, but optimism could remain in place as long as we hold above the 0.7060 region and above the 20-day moving average, which has been a key support level over the past week. So as long as we hold above this line, above this territory, there is additional upside pressures are likely, and perhaps the price may retest 0.7160 as 0.72 territory, where the 61.8% Fibonacci retracement level of this long-term downfall from 2020 to 2025 is placed. So that could be a critical territory, and once we surpass this, the rally could expand towards the June 2022 high of 0.7280. Now, in the event downside pressures persist and a break below the 0.7060 and beneath the 20-day moving average happens, then we may see a steeper decline towards the 0.6960 region, where the 50% Fibonacci mark is located. Another violation here could take us lower to 0.6870 and closer to the 50-day moving average. There is a tentative support trend line passing through this region, so that could be a critical region to watch before we see another important bearish action. And finally, looking at everyone's favorite, Bitcoin. Well, the market has been quite downbeat lately. It hit a 1.5-year lows of 59,975 earlier this month, but since then it has been quite stable. Downside pressures emerged this week as well, but yesterday we saw a nice rebound which held the price to close slightly above the 20-day moving average and almost reach the 70,000 round level. Now, the question here is whether there will be more upside in the coming sessions, and it seems that the technical indicators down here are showing some upside tendencies. What is more important is that we have a nice candlestick pattern, a nice green candlestick following a doji candlestick down here. So that also provides some optimism that more gains could follow in the coming sessions. But of course, a confirmation is needed, and in this case, I would like to see a clear close above the 70,670 region, which coincides with the 50% Fibonacci retracement level of this long-term uptrend from 2022 to 2025. So once we surpass the 50% Fibonacci mark of this uptrend, we could see a continuation towards the 50-day moving average. Perhaps the price could meet this line near 78,500, where it stalled back in earlier this month. Then higher than that, I would pay attention to the 38.2% Fibonacci mark of 83,770, because that's where the upper band of this bearish channel is placed. We need a significant violation here to the upside in order to change the outlook from bearish to positive. If that happens, then perhaps we may see a more aggressive rally, in which case I suspect that the price could even break above the 90,000 round level and approach the 200-day moving average near 97,947 at the moment. So that's everything I wanted to show, guys. Thank you for watching. If you like my video, please subscribe to this channel. More videos will follow up next week. So I wish you have a great trading session, and we'll be back with more updates. Bye bye for now.